Imagine owning a brand new Ford, driving down the road, and suddenly realizing that your car might not be as safe as you thought. That's the reality Ford Motor Company is facing today, as the automaker's record-breaking recall tally continues to grow. It's a story of ambition, missteps, and mounting pressure on a company that has been a symbol of American automotive prowess for more than a century. The latest notice from the National Highway Traffic Safety Administration, or NHTSA, involves nearly 1.5 million vehicles from 2015 to 2019, all affected by rear-view cameras that could display distorted, inverted, or blank images. Dealers will inspect and replace cameras as needed, but the impact on Ford's reputation and stock has already started to be felt. This recall adds to a staggering total. Ford has now recalled about 9.3 million vehicles in the U.S. this year alone. That's more than 60% of all recalls by major automakers combined, and sets a record no company wants to hold. It's not just numbers on a page. These recalls represent millions of drivers whose safety could potentially be at risk, and each recall adds more scrutiny to Ford's operations. While recalls are part of the industry's commitment to safety, Ford's recent spate of issues has transformed them into a serious investor concern, highlighting the tension between corporate responsibility and shareholder confidence. Now, let's pause for a moment. Think about the financial toll of these recalls. Back in July, a fuel injector recall cost Ford nearly $600 million, and that was just one of several high-cost fixes this year. In August, about 100,000 vehicles had to be recalled over a potential airbag problem. It's clear that ongoing quality issues don't just affect drivers. They have real financial consequences for the company, affecting earnings, investor confidence, and ultimately, stock price. Even more concerning is the history behind these numbers. Ford stock has had a volatile year. Shares dipped to $8.44 in April following broad, reciprocal tariff announcements, yet climbed to $11.99 in August. Coming into Tuesday's trading, Ford was up about 18% year-to-date and 10% over the past 12 months, showing that investors were willing to look past some of the challenges. But the latest recall news is a stark reminder that volatility is always lurking. Let's focus for a moment on the numbers behind Ford's recalls. 9.3 million vehicles recalled in a single year is unprecedented in American automotive history. These vehicles range across multiple models and production years, highlighting a systemic challenge for Ford. The rear-view camera issue, though seemingly minor, is critical because it directly affects driver safety. If the camera fails to function properly, it increases the risk of collisions while reversing, particularly in crowded urban environments or tight parking situations. The consequences aren't just financial, they're human. Investors are watching these developments closely, and the market has responded. Ford stock fell 1.7% on Tuesday, closing at $11.49, while broader indices like the S&P 500 and Dow Jones Industrial Average edged higher. It's a contrast that underscores how company-specific issues can move individual stocks independently of the broader market. And while the stock is still up significantly from the lows earlier this year, the recurring recalls and mounting expenses are raising red flags about long-term profitability and operational efficiency. Ford has publicly explained that the increased frequency of recalls reflects an intense focus on identifying problems and protecting consumers. The company is attempting to frame this narrative positively, emphasizing proactive safety measures. However, critics argue that repeated recalls suggest underlying quality control issues that need to be addressed more rigorously. Each new announcement invites scrutiny from regulators, analysts, and of course, the driving public, all of whom are watching Ford closely. Now, consider the broader financial context. Last year, warranty expenses soared, and missed earnings targets led to an 18% dip in shares following the second quarter report. With recalls costing hundreds of millions annually, it's clear that maintaining a strong balance sheet while addressing these issues is a delicate balancing act for Ford. For shareholders, the question is simple. Can the company continue to deliver profits while managing these ongoing challenges? Here's another layer to consider: the impact of tariffs. President Donald Trump's tariffs are projected to cost Ford around $2 billion in 2025. While investors have largely shrugged off these geopolitical concerns so far, they add to the unpredictability of operating costs. Combine that with record recalls, and Ford is navigating a complex web of financial, regulatory, and reputational challenges all at once. Back to the vehicles themselves, let's think about the driver experience. For those who own 2015 to 2019 models, the idea of a rear-view camera failing is alarming. It's a feature many rely on every day, not just for convenience, but for safety. Knowing that a distorted or blank image could appear while reversing adds a layer of stress and underscores the importance of timely inspections and repairs. It's these human factors that transform abstract numbers into real-world impact, and Ford must address them with urgency. And yet Ford's situation isn't entirely bleak. The company's willingness to identify and rectify problems can be seen as a sign of commitment to consumer safety. They are actively inspecting and replacing affected parts which, in a perfect world, would prevent accidents and maintain customer trust. Still, repeated recalls create a cumulative effect, which can weigh on brand perception and investor confidence alike. Financial analysts note that Ford's exposure is multidimensional. Recalls translate into direct costs for repairs, potential liability issues, and the need for additional staffing or logistics. Over the course of millions of vehicles, these costs scale quickly, hitting margins and complicating forecasting. For the average investor, these are not abstract concerns. They're tangible risks that influence stock performance, dividends, and long-term growth prospects. Despite these challenges, Ford has shown resilience. The stock has rebounded from lows earlier in the year, and there's optimism among some analysts that these recalls, though significant, reflect a proactive approach to quality assurance. By addressing defects early, Ford may prevent more severe issues down the line, even if it comes at the cost of short-term expenses. Let's not forget the human element in all of this. Car owners across the country must navigate recalls, schedule repairs, and deal with the inconvenience of being without a vehicle. The trust between manufacturer and consumer is tested every time a recall is announced. Ford's response to these situations is critical, not only for safety, but for maintaining loyalty and confidence in the brand. The trajectory of Ford's recalls offers a cautionary tale for the entire automotive industry. Even established companies with decades of experience can face systemic quality challenges. Proactive management, robust supply chain oversight, and rigorous testing are all vital in preventing situations like this. As Ford navigates these issues, the lessons learned will likely influence how other automakers approach recalls, safety, and quality control in the future. In conclusion, Ford Motor Company is facing a historic moment. Record-breaking recalls, financial pressures from tariffs, and fluctuating stock performance paint a complex picture. Yet the company's commitment to addressing these issues shows a focus on safety and long-term sustainability. For investors, drivers, and the broader public, this is a story of caution, resilience, and the ongoing balancing act between corporate responsibility and financial performance.